Coming up on Market to Market, flooding and blizzards complicate the final days of 2025. This year's biggest stories in rural America and commodity market analysis with Don Roose next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, January 2 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. This is the week of year-end sales, purchases, and loan discussions before policymakers return to their appointed positions. But Mother Nature didn't get the memo for an uneventful end to 2025. David Miller looks at the major disruptions across the country this week in our weather wrap.
After the warm weather experienced by much of the nation over the Christmas holiday, extreme winter weather struck the nation from Maine to California. In the Midwest, a bomb cyclone brought blizzard conditions that included whiteouts at the beginning of the week. Driving was treacherous, and a 100-mile stretch of Interstate 35 from just north of Iowa's capital city, Des Moines, to the Minnesota border was closed for nearly 24 hours. Snowfall throughout the Midwest ranged from 5 inches to 24 inches. Dangerous wind chills of minus 30 degrees were felt in northern Minnesota and North Dakota. The weather triggered power outages for an estimated 350,000 customers. Nearly one-third of them were in Michigan. The storm turned east and added to snow that had already fallen across portions of the Northeast, including Pennsylvania and New York. Travel was difficult, and more than 90 car crashes were reported in Vermont alone. Over 9,000 flight delays were experienced around the country. In the West, heavy rains and strong winds from a series of powerful winter storms made for the wettest Christmas season to hit Southern California in years. High water trapped a few residents that needed to be rescued. The inclement weather triggered widespread mudslides and debris flows, leaving several homes and streets filled with mud. High winds are expected throughout the region in the coming days, with 2 more storms forecast for later this week. For Market to Market, I'm David Miller.
The year 2025 is behind us, but it looked like several others. Weather and policy dominated much of our space, but it was 2 words that dominated like no other: trade and tariffs. More than 30 of our episodes featured one or both of those words before we even made it to the analysis section of this program. This week's cover story is our annual Year in Review.
I, Donald John Trump, do solemnly swear
that I will faithfully execute.
President Donald Trump returned to the White House for his second term, taking the oath of office inside the Capitol. He moved on campaign promises shortly after, signing executive orders rescinding actions taken by President Joe Biden. Among them were a withdrawal from the Paris Climate Accord and freezing most federal hiring. Once back in the Oval Office, the president addressed immigration, declaring a national emergency on the U.S.-Mexico border, calling for more barriers and an increased crackdown on undocumented immigrants.
The first thing I think that's important to note is
Brooke Rollins was at her confirmation hearing that same week, facing questions from lawmakers. Her approval as Secretary of Agriculture would come shortly after the hearing ended. Tariffs would be the tool of choice for the president, as various duties were slated to be levied on countries all over the world.
the tariffs will go on agricultural product coming into America, and our farmers starting on April 2nd. It may be a little bit of an adjustment period.
Major trading partners, Canada, Mexico, and China would be at the forefront of the strategy for much of 2025. Each country would counter with tariffs or policy changes of their own. Again, farmers were watching the action to see how it would impact trade relationships and sales with major global customers.
And today we're standing up for the American worker, and we are finally putting America first.
In early April, the Trump administration placed tariffs on imports from virtually every country on the planet at rates higher than the infamous Smoot-Hawley tariffs of 1930. Trade analysts estimated up to 68% of goods imported into the United States fell under the new tariff plan. Economists were estimating the cumulative costs of tariffs could act like a $3,800 tax on each U.S. household annually. By May, the U.S. and China reached a deal to cut tariffs for 90 days while continuing to negotiate a long-term trade pact.
So it may be the case where tariffs are just a lot less than they were initially, which both countries can claim as a win.
At the end of October, a breakthrough.
Large amounts, tremendous amounts of the soybeans and other farm products are going to be purchased immediately, starting immediately. If you notice, President Xi authorized yesterday for China to start.
The details of this announcement included a promise by China to buy 12 million metric tons of soybeans in the final months of 2025 and a minimum of 25 million metric tons annually for the next 3 years. If realized, the deal would return Chinese soybean purchases to near the average of 26.6 million metric tons the country imported annually between 2011 and 2024. China purchased 27 million metric tons of soybeans in 2024. Several courts would hear arguments on trade and rule in various ways in 2025. The U.S. Supreme Court heard a case on the legality of the new tariffs in November. A ruling has yet to be issued and is slated for a 2026 release. The Trump White House has repeatedly vowed to make farmers whole as they wait for exports to pick up. Secretary of Agriculture Brooke Rollins suggested in early December the long-discussed financial relief at a cabinet meeting.
The bridge that is needed to get from the last administration and what basically happened under the last president and the last U.S. Department of Agriculture to this new golden age for farmers where instead of farming for government checks, they can farm to feed their family and sell their products and pass it on to the next generation, that this bridge is absolutely necessary based on where we are right now.
The next week, the White House announced the bridge payment plan to assist farmers who have lost income due to trade disruptions caused by higher tariffs. The bulk of the $12 billion package is targeted at the major commodities: wheat, corn, soybeans, cotton, peanuts, and rice. $1 billion of that fund has been reserved for specialty crops. This is the highest single year of relief payments for farmers since 1933. Another priority of the Trump administration was addressing foreign sources of labor and immigration. In July, Secretary of Agriculture Brooke Rollins promised to find a balance between deporting undocumented farm workers while not disrupting the agricultural supply chains they support.
Ultimately, the answer on this is automation, also some reform within the current governing structure. And then also, when you think about, there are 34 million able-bodied adults in our Medicaid program. There are plenty of workers in America, but we just have to make sure we're not compromising today. So no amnesty under any circumstances. Mass deportations continue, but in a strategic and intentional way as we move our workforce toward more automation and toward a 100% American workforce.
The Make Our Children Healthy Again strategy report was released by the White House in September after months of work. The document was promoted as the final outline of federal actions to improve the health of America's children.
Today's report outlines a bold framework to improve children's health through 128 targeted directives and strategies.
In a departure from the preliminary assessment issued in March, the report avoided recommending limits on pesticide use in agriculture. Weather again played a role in rural America as tornadoes ushered in the new year with a large blast of winter to end it. In the middle, ideal rain fell for many in the grain belt before a late season drought arrived, limiting a large harvest of corn and soybeans. Cattle prices held at record highs for much of 2025 as years of drought reduced herd sizes. forcing ranchers to liquidate their animal assets. High demand at the grocery store counter, along with a closed Mexican border due to an outbreak of the New World screwworm, added to price pressure. The president pledged to help cut high prices at the grocery store by increasing ground beef imports from Argentina.
We want to turn, as usual we do at this time, to this week's commodity markets with market analyst John Roose.
As we celebrated the end of our 50th season in various ways, that included live tapings of the MTOM podcast at various locations across rural America, and ended with a gathering of analysts for panel discussion at the end of the tour.
A lot of people talking and so forth. Suddenly it's...
Next, the market-to-market report.
We are again recording early this week ahead of the New Year's holiday. These closes are a weekly look from Tuesday the 23rd to Tuesday the 30th. For the week, the nearby wheat contract lost 6 cents and the March corn contract fell 7 cents. Favorable weather in Brazil is partnering with weak export demand to keep pressure applied in the soy complex. The March soybean contract fell 2 cents, while March meal cut $7.50 per ton. March cotton expanded by 29 cents per hundredweight. Over in the dairy parlor, January Class 3 milk futures declined by a penny. The livestock market was mixed. February cattle added 48 cents. March feeders put on 5.58, and the February lean hog contract was off by 53 cents. In the currency markets, U.S. dollar index was higher by 26 ticks. February crude oil lost 34 cents per barrel. COMEX gold sold off 138.60 per ounce. And the Goldman Sachs Commodity Index was up by just over 2 points to settle at 555.75. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Roose. Hello, Don.
Glad to be back, Paul.
You know, this week of this time of year each year is slower traditionally, but we really seem to be slow this week. Why?
Well, you know, you're right. We usually say during the holidays it's slower and lower. And, you know, I think that's kind of what happened. But, you know, I think when you look at the market, there's a lot of uncertainty out here. You know, the funds are sitting long soybeans, which is unusual, sitting short corn. And I think we're just waiting for what's going to happen with the January crop report on the grain market.
The one market that you didn't mention that had the most potential for news was wheat. We had Russia-Ukraine. We had Ukraine's president in Florida. We had discussions that an end is coming, but then we don't. So are we out of the geopolitical business impacting wheat right now?
No, I don't think so. But I think when you look at the wheat market, the big problem is there's just too much wheat in the world. You know, this was a week where we were watching some of the talks between Russia, Ukraine, but also then the grain minister for Russia came out and upped their wheat crop. They're the largest wheat exporter, largest wheat producer in the world. So the wheat market rallied 21 cents at time short order, but pulled right back to almost the lows again around that just above 504. So it just can't go anyplace, Paul.
What are you hearing? Are you hearing this thing moving up a little higher?
On the wheat market?
On the wheat market?
You know, I don't think so. I think, you know, we try to add sometimes a little war premium. You know, Australia, Argentina had record wheat crops. You know, that's coming at us. I think it's fair to say that for the market to have a substantial move to the upside, get out of the doldrums, is probably going to have to take some North America weather problems.
Well, let's talk about corn, and we have this report coming up in January, and Gary in Wisconsin has a specific question for you, Mr. Roose. He says, we keep hearing these bullish corn sentiment things about the January 12 USDA report. We've had great corn exports, yet the market keeps going down. The usually bullish Christmas market bypassed us. What miracle do we need to see for corn prices to rise?
Well, we did have a Santa Claus rally. We rallied up to that 453 on nearby wheat. That's the top end of the range that we had so far since end of October. You know, what do we need to move up out of here? I think he's right. We're going to need something like we had last year, lower yields. Last year we went down 2.8 bushels. I think it's going to have to go down more than that. But then I think you're also going to need some weather problems. Argentina's just about done planting their corn crop. The Brazil corn crop gets planted when the beans come off. So I think it's fair to say maybe a lower yield in this report, but probably realistically it's going to take some weather problems in South America.
And the only weather problem, you kind of talked a little bit about, Argentina's the one that's hot and dry right now. Is that what you're hearing?
Yeah, it's a La Nina year.
Yeah.
So where we're at is in those years, southern Brazil, Argentina is supposed to be warmer and drier. Now, La Nina is more neutral, but it is south and central Argentina that's turning dry.
Sentiment here on the show the last couple of weeks has been about more corn acres in 26. What's that do to new crop right now for you?
Well, you know, I think when you look at it right now, I think what we're really looking at is probably soybean acres go up 4 to 5 million, and probably the corn acres go down 4 to 5 million, just because last year, you know, we upped the corn acres. So I think what it means was when soybeans were up around over that $11 mark, $11.30, looked like some pretty early sales we saw some people tackle. But, you know, the corn market might have a little better fundamentals than it had this last year, Paul, with lower acres.
And corn has performed quite well the last few months, despite all the headwinds that could be impacting it. Is there any one reason that stands out to you?
Well, I think the number one thing is the producer in the U.S., when you look at their break-evens and the prices, there just hasn't been a rush to sell stuff. You know, it's been kind of a sputter type of sell. I think it's going to be key what happens after the first of the year.
And as the grain, the bin door gets welded shut at the New Year's celebration for some, and maybe that's the wrong family I'm discussing in public. I shouldn't do that. Let's talk about soybeans. But before we do, you were watching we report on the metals. There's one metal in particular that we need to be. Gold's been on a sell-off. I mean, gold was running high. But tell me about silver and its impact on commodities.
Well, the silver market this week on Monday had the largest trading range in silver in history. But if you go back to I've been around with this thing a while. If you go back to the late 70s, early 80s, almost every day when you came in, you watched the direction of silver, to a lesser degree gold, to see what the soybean market and corn market was going to do. In other words, if silver is going to be up 20 cents, soybean calls would be up 1 to 2. So some of that was the inflationary time frame back there, a flight to some real assets, and I think that's what's going on right now. But we followed it sometimes on the silver here this week, but sometimes not. So far, not a real connect like we had back then, Paul.
Any movement that stood out to you in soybeans? We talked about good weather in South America. We've had weaker export demand. China still has to, you know, complete the process to take the U.S. bean. What's the biggest factor for you this week?
Well, I think the one thing that you ask, I mean, the fundamentals on soybeans aren't that great. You have to use your imagination. You've got a huge crop coming at you from Brazil, 6.6 billion bushels. We're going to have 4.3 billion. But when you say that and you look at that, the funds are sitting here and they've been consistently long soybeans, like 140, 50,000 contracts now. Why? I mean, what's underneath this market that gives them the desire to stay long? So there's some kind of a supportive element under soybeans. Maybe it's the acres, you know, next year in the U.S. Maybe it's concern about weather that we're going to have. Maybe it's the 45Z program that the government comes out and announces something positive for biofuels. But for whatever reason, the charts, we rallied to $1.40 from the end of November up until December, and then we broke $1.16, but we're back at support, trying to see if we can hold here, Paul.
What's a bigger story for you next year in soybeans? Is it China's involvement, or is it a large South American crop?
Well, I think, you know, you take them one at a time. I think, first of all, it's the big South America crop. How does that get digested into the market? Then I think, what do we see for biofuel programs out of the administration that can give us some support? And then I think we're going to look at the acres March 31st, see what we get for soybean acres. You know, are they going to be up how much? I think they're going to be up. And then I think we quickly look at the weather. So I think it's 1, 2, 3 going down the road, Paul.
I didn't hear you say yield, though, on beans. We always talk about that corn yield we think is going to be lower in January because that's the trend that we've been doing. What do you think the bean yield? Is it going to follow corn?
Well, you know, the soybeans feel like we know a little bit more about the soybeans than we do the corn just because of their earlier harvest. But, you know, soybean yield, I think if it goes down, it's just mildly. I don't see it going up.
Okay. Let's go to livestock for a minute. One of the biggest stories for years has been the rise in this cattle market. And I have non-farming family friends asking me about this market. What are you asked at the dinner table here at Christmas about what's going on with cattle? What's on their mind?
Well, I think the big thing going forward is we know the supplies are going to be tight next year, but is the demand going to hold up? So, I mean, is the disposable income going to push over to beef or continue with beef, or do we buy protein down? And then I think you have to ask yourself, Paul, last time we had a cattle cycle like this was 2014, 2015, bullish fundamentals all the way into 15. And we dropped 30% from 14 to 15. So we had a 62% retracement on these cattle from their big $46 drop in February. So we've kind of pulled back up, measuring what's going to happen going forward.
Well, the chart we just showed, that sell-off at the end of November, that was kind of, all right, here we go. This is 14 and 15 again. The waves. Talk to me through the technical side of this cattle trade.
Yeah, I mean, I think that's it. I mean, if you're a big, what we call an Elliott wave trader, you follow some of these wave counts. We've just retraced back up, and I think the question mark is, do we stall here and you start, 2 steps down, 1 up, or do we go make new highs, past this 250 mark? So I think a lot of it boils down to demand, Paul. I think that's where we're really at.
Well, and that's consumer demand that you're referring to. I don't know, January, historically, is January one of those months? We're not grilling. It's not the spring. It's not the summer. So is that going to be enough to force a lack of demand to push this higher?
Well, what?
Or lower, I mean?
Well, we went through the holiday time frame, and that's usually a strong period for beef.
Okay.
The beef didn't move that well. The Packers losing about $250 a head right now. He's ultimately the guy that consumes, but the beef in cold storage was down 3.4% the end of November versus last year, so still tight numbers.
Cattle retention, we're starting to hear maybe is starting to happen. Is that what you're hearing?
I think so, just a little bit, but not anything. The ranchers, a little bit older, and so we're seeing, some people getting out. So it seems like it's sputtery, Paul.
Anything else in the feeder market that's to pay attention to here as we flip into 26?
Well, I think for the the feedlots, I think you have to be very careful. Cash feeders are still very expensive, so I think the number one thing is guard the bottom line, Paul, because there's a lot of air under this market if this is a market that's cyclical topping.
We've had, I won't say indicators, but whispers of this is maybe now the time to sell. Are you hearing things like that too about this feeder market?
Well, I think cow-calf guys, in the driver's seat. So,
okay.
No doubt, there's a lot of money being made. So he's the guy that's getting the reward.
And that has been what the story is. I was looking at some Dr. Peel from Oklahoma State commentary from the year. He said the exact same thing. Cow-calf has been the one in charge of this for a while. Let's flip to hogs if we could. There was something that was kind of interesting. We don't get a ton of news on hogs, let alone this week. We've seen U.S. pork demand at a 6-month high, and we're also seeing July and August contracts with new contract highs. What is going on?
Well, we had a bearish hog and pig report, neutral to bearish, and we've gone up ever since. I think part of it is the export pace is record. It's strong. We're the largest pork exporter in the world, and I think on top of that, the consumer demand is strong for pork. So, but you're right. We went back up to this 104 area on summer months. That's a big resistance area most of the time. So, you got to be a little careful up at these levels. But we're definitely reacting positive to negative news, Paul. That's a good sign.
We talked a little bit about renewables. The price of gasoline at the pump for the consumer, below $2 in Iowa in some spots. We're seeing the national average tick down. We're seeing oil. Is this just the extension of lower crude oil prices and just OPEC putting so much onto the market? And where does renewables and ethanol play into this discussion right now as we look at some of these other commodities and their movement towards the end of 25?
Well, definitely, I think our expansion area, I think in the grain business, when we look at South America and you see, they're continuing to up their production, no doubt we need to continue to look at biofuels. That's our growth area. And, as far as the energy values, we're producing a lot of energy here in the U.S. now, self-sufficient exporter. So I think that's part of it. Good value for the consumer back to the beef, so maybe he has more money to buy beef.
Are things more intertwined? You talked about your years of experience. Are they more intertwined than they ever have been, or is this just we're paying attention to everything that's intertwined.
I think it's the media that we have. I mean, you can get news almost anywhere 24/7. So I think that's part of it, Paul. So I think the news is out there and it's easier to track.
This can be just a couple of word answer. Which commodity surprised you the most in 25?
Silver.
Which one do you think will give us the biggest surprise in 26?
I think it will probably be the stock market, if I had to say.
Higher or lower?
I think probably lower.
Yeah, we're maybe due for a correction. All right. Don Roose, good to see you. Happy New Year to you. Thank you as always for making time.
Happy New Year to you and all your listeners, Paul.
All right, Don Roose, everyone, and you have been watching the analysis segment. In a moment, Don and I are going to continue our discussion in an online-only segment. Search Market Plus with Don Roose. That's ROOSE, wherever you get your podcasts, to hear that conversation, or go to our website at markettomarket.org. New year and new you with learning. January is the perfect time to dive into our Market-to-Market classroom project. We have modules perfect for covering the content that we discuss here and that many of you live each and every day. Head to markettomarket.org/classroom. Next week, we will see you for a story about squid squabble in Oregon. Thanks for watching. Goodbye.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.